there are quite a few things that you need to consider before you're looking at Singapore. I think the consumers there are relatively mature, they're relatively savvy, and they're well exposed. So in terms of their receptivity towards, let's say, foreign products, it's a lot greater than many other probably surrounding markets. I think there are four main things that you need to be aware of. I think firstly, you need to understand or know yourself. Why are you in Asia for? Is it because of sales? Is it to diversify your market presence? Is it as a sourcing hub? Secondly, is you need to understand the psyche of your consumers or your customers. The receptiveness towards the concept or the product or the service that you may have, right? In what frequency would they make those purchases, and in what sizes do they ideally like them to be in? Right. Thirdly, I think you understand your competitors, because Singapore being a very open economy by nature, right? There are tons of competitors out there, both local and foreign. You need to understand how you're going to differentiate yourself from the existing competitors and also future competitors that's going to be coming in. And fourthly, you need to know your numbers. Singapore, probably against popular perception, is never a cheap place to do business. It's often, in the top 10 most expensive cities in the world. Right? But of course, on the flip side of that is, the purchasing power, the wealth levels is there. So it definitely can be a very attractive market as an initial first step, into the rest of Asia. It very much depends on what's your risk appetite, right? The least commitment, the least risk, you probably just do simple exporting on one end. On the other end of the spectrum, you have probably what you call a wholly owned subsidiary, which requires a lot of more commitment and a lot more investments and resources. You may want to reduce the level of financial commitments towards expanding your business in Asia, then that's where a joint venture, may possibly come in, where your local partner on the ground in that particular country may contribute towards the financial requirements of your business plans that you intend to roll out. So it really boils down again to potential challenges that you think you might face. What can the partner bring to the table in terms of certain competitive advantages, be it access to markets, overcoming certain regulatory barriers, or just simply understanding the customers a lot better than you do, right? Or it could be just financial. And I think at the same time, retain that flexibility to shift and change along as you need. On one hand, I think Singapore is often voted one of the easiest places in the world to do business in. The way that businesses are being conducted is very international as well. Also, because since from day one, because we're just such a small country, we have to be very international almost from day one. So it's almost as part of our DNA. But having said that, there's still the Asian side of Singapore, where certain cultural differences definitely do exist. And these are things that any businesses coming from the UK needs to be very mindful of. Right, and also needs to be, factored that into the expected time in which they intend to meet the objectives. That the Singaporean consumers tends to be a very mature and savvy lot, but they are also mindful of the value that they believe, or the perceived value they believe in paying for any particular product or service. And I think for a lot of businesses coming from the UK, they should leverage on the fact that you are a UK brand, because that will push you up a few notches in terms of the brand perception, the value perception, and eventually affect your pricing strategy and your pricing mechanism, to operate in a market like Singapore. I mean, you'd be surprised that manufacturing is probably still a cornerstone of our economy. It contributes almost a quarter of our GDP. But if you talk about an area of services or financial services or consumer services, again, there's a huge market there. There's a whole host of what you call aspirational needs and aspirational demands. The consumers are constantly on the lookout for new concepts. So I think there's a whole host of different sectors, industries, products or services where I think the opportunities are still very attractive, in Singapore. Pick out the elements that has worked very well for you in the UK, be it in terms of your history, your tradition, your product features, the quality, your responsiveness, right? I think all those needs to be really highlighted and elevated, and that will possibly help you to create a competitive advantage and differentiate yourself from, let's say, the local competitors that you may be facing in Singapore. Then of course the next question is how then you then differentiate from the other foreign competitors. You need to probably look at some level of localization where it's not just a pure 100% UK product. We've retained the best of what has worked in the UK, but we have helped to localize it, to meet the Asian consumers, its needs, its requirements, its nuances, and its preferences. Right? So I think that you've got to be very clear about, and that's something that requires quite a bit of homework, to be done, because what may have taken you 100 years to build in terms of your brand here in the UK could possibly all go haywire overnight, if it's not done and executed correctly, in Asia.